Breakout trading setup. That's the topic for today. Welcome, Barry Burns here with Top Dog Trading, and let's get right to it. So, a lot of people like to do breakout trades, and they can be profitable at times, but gotta tell you, there's another outlaw in town, another cowboy in town, if you will, who is really messing with that. And it is very common in the way markets move these days. So, if you're going to trade, for example, we got a gap here, and then so that's the high of the day, and then we break the high of the day. Well, we break the high of the day, and then it comes right back down. So is that a breakout or a fake out? That's a fake out. Then we come back down here and look at these lows. Let's see if I can catch the low of that bar. Yep, there we go. Keep that horizontal. And again, it just barely takes out that low and then goes back up. Look when it goes back up. It comes up here, and let's just keep it here for now because I got another thing to show you. Just barely takes out that high. And then look at this high. Okay, that new high that's created when the market comes back to it, it just barely takes out that high. So this messes with all kinds of traders. It messes with breakout traders, and it messes with trend traders because you're looking for higher highs, higher lows, that sort of thing. But they're not really significantly higher highs and higher lows. They're just, I call it a pierce. Basically, what I mean by a pierce is if you're using candlesticks, then you just get the wick. Now, in this case, you get a little bit of the real body up there too. But the main point is it is taking out that high. And so now the trend traders who are long, they're encouraged. And then they're going to get stopped out, or their trailing stops hit at least. The breakout traders, they're totally screwed. Breakout traders over here. So instead of, let me get my drawing tool up here. And here's a pattern that we're seeing a lot recently. Right, let's do that one, and let's make it blue. So, whoops, missed my blue. Okay, black. Black's okay, but we'll do blue. So instead of the typical Stirstep pattern like this, what we see a lot of times is something, and let me get my actual line tool here instead of just the pen. Make it more clear, I think. So markets will come down like this, they'll go up like that, then they'll come down and just barely take out that low, and then they'll go back up here, just barely take out that high, come down here, barely take out that low, come up here, barely take out that high, come back down. And so it is not your typical accumulation, stair-step pattern. Now, we still get these sometimes, but, the market does all sorts of different things at different times, different iterations, different movements. And so I'm not saying this is what happens all the time. I'm saying watch out for this. I want to protect your capital. You want to protect your capital. And so be aware that there's a meta pattern, and it's not a totally new one. Right, it's been called by some people to be a megaphone or an expanding triangle. But I think we're seeing a lot more of this now than we used to many years ago. And even here, it's not really even a megaphone or expanding triangle. So you can get those patterns, but those usually do move a little further beyond the previous cycle high or beyond the previous cycle low. These are a little more nefarious in that they're just barely breaking the previous low. So if we come over here again, you'll see, oops, let me get my correct color here. Let's go with, we used black before. We use black again for this purpose. And then if I draw by hand, I'll go ahead and I'll use the blue again. So again, off of this low, that's the low of the day so far. And people used to have this technique where they say, oh, if you get above the current day's high, that's bullish market. If you get below the current day's low, let's say bearish market. And I have not found that to be very effective in recent years, not just days or months, years. This has not been a very effective technique in my experience. Rather, we get this. And again, it's not enough to make it really a megaphone or an expanding triangle. It's just enough to basically run stops. All right, and so if we go forward, actually, let me show you how to trade this. Let me give you a couple of extra little tips here then on how to actually put this into practice in your own trading. Okay, so the first thing you want to do is what I've done for you here already is be aware of that meta pattern, and then instead of being faked out by it, look for the fake. Don't always look for the break, look for the fake. Make the breakout or the fake out another one of your trade strategies so that it's at the front of your mind where you're actually watching for it. So here is an example, the beginning of this day. Come down here, there's our low for the day. The market has just opened. And we're going to look at this and we're going to see, okay, I'm not going to trade the breakout, or if appropriate, you can, but today's lesson is on the fake out. So you say, well, these fake outs happen a lot. So let me see if we get one here. Now, a couple of signs that you're getting one is, again, you want it to actually make a lower low. You don't want it to make a higher low. For this strategy, at least, it's a lower low. Again, you want it to be primarily just with the wick. Maybe little real bodies there, that's fine, but it's the wick of the candle. That means a rejection of value as the buying and the selling came in. Sure, some happened down here, but at the end of that time frame, this is a 3-minute chart, it closed back up here, almost equal with the previous low. The next open comes here, and we close above that low. So that little 2-bar pattern there, you're looking for some sort of candlestick pattern that is a reversal pattern. Now, then we look at volume. That's probably the thing that you've already noticed, is the volume here really stands out. And that's exhaustion volume to the downside, and that indicates the buying coming in. Now, this is early in the day, so this is within the first, first hour of the day, less than the first hour of the morning. And so you're going to get some volume coming in, just because a lot of volume comes in on the morning. But so these spikes, they could be meaningful. But again, the point is, look for, you got to put this all together. In other words, there's pieces of a puzzle. In my own personal trading methodology, by the way, I have 5 different pieces that I put together. 5 mathematical models I combine together. Each one of those models is uncorrelated to the other 4. So when they all align, bullish or bearish, then I take a trade. Gives me a probability scenario. So can't give you all 5 right now because we're almost done with this video, but that's what I'm doing here. So we come down, number 1, take out the previous low, but not convincingly, rejection of value. Get a bullish low here with our candlestick pattern. Could be different types of candlestick patterns. And number 3, volume spike. Okay, so those are the 3 steps, and then off to the races she goes. Zing, zowie, zappy, zungi, and kawungi. And now we get our more typical Stirstep pattern. All right, so there you go. And so these can be very profitable trades. They're also a type of contraction trade, so it fits into that category of things like wedges and triangles and Bollinger Band squeezes, because we have a contraction of volatility in here. And notice that, yeah, we got a lot of volume, but the market's not really convincingly going up or down. So there's a buildup of orders here that eventually direction will be established. And you want to be on the right side of that direction for low risk. I mean, your risk on this trade basically is just, actually, I put my stop below the low of this bar right here. And off we go. And then your reward is like that. So your risk is something to the effect of that, and your reward is something to the effect of that. Okay, my friends, so that's it for today. You might want to play around with it, try it. Just be aware of it. If nothing else, be aware of these patterns so you don't get hurt by them. And then, optimally, flip it around so that you can make money with them. And another thing I use with this, with all my trading actually, is my timing indicator. And it's a common indicator. It's already on your charts. It's a modified indicator that's on your charts. And I've got a recorded webinar where I'll be happy to show you how to set that up. And not only how to set it up, but how to use it. There's techniques, again, step 1, 2, 3 on how to use that cycle indicator. Feel free to go to indicatorwebinar.com and I'll give you a complete tutorial there.